Welcome to Turning Hard Times to Good Times. I am your host, Jay Taylor, and I'm speaking to you from Queens, the borough of Queens in New York City. It's the 23rd day of June in the year 2020. I do want to remind you that I'm the author of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and you can subscribe to my letter by going to miningstocks.com, or you can call our office during normal work hours here in New York City at 718-457-1426, 718-457-1426. Also like to suggest you take a look at Chen Lin's letter, What is Chen Buying, What is Chen Selling? Go to chenpicks.com. Chen is very excited about a number of biotech stories that he's following, and that is an area of expertise that he has developed over the years. He also follows a number of gold mining situations as well, and on the energy front too. So what is Chen Buying, What is Chen Selling? chenpicks.com. And go there to sign up for his letter. And Michael Oliver, who is with us today, we always like to remind you, it's OliverMSA.com. The best technical analyst I've ever met up with, at least for my purposes, the way I invest. So I'm very pleased to tell you Michael will be with me in just a couple of minutes from now to give us his latest thoughts on some of the most important markets that we track. I do want to thank all of you for listening to this show, making it one of the more popular shows in the Voice America Business channel. Also, I want to invite you to send along whatever comments you have about this show to questionsfortaylor@gmail.com, questions at number 4, taylor@gmail.com. And, of course, we do want to thank our sponsors, because without them, there would be no show. Our sponsors this week, RN Resources, Great Bear Resources, Benchmark Metals, Hannon Metals, Irving Resources, Noble Resources, and Sitka Gold Corp. I've titled today's show, Transitioning from Democracy to American Tyranny. Bob Moriarty, Ivan Bebek, and Michael Oliver, as I just noted, will be with me. The violence following the tragic death of George Floyd was blamed on racism. Black Lives Matter. But why then do numerous murders of black men occurring every weekend in Chicago and other major cities go totally unmentioned or unnoticed? Bob Moriarty posits that the Fed's role in orchestrating ongoing massive wealth redistribution is more severe now than any other time in American history, and that is leading to an energizing force behind a lot of the lack of lawfulness that we're seeing now and the destruction that we're seeing of property within major cities, not to mention lives that have been lost during these demonstrations as well. Are we in some danger of some sort of an overthrow of our traditional values? Is this a cultural revolution? Are we facing something that will strip away our First Amendment rights and our rights to be who our Declaration of Independence told us that we have the right to be, the God-given right to be, to pursue our happiness and to be who God created us to be as individuals, not as puppets of the state? Well, those are issues that we'll talk to Bob about in the second half of today's show. And I will be talking to Ivan Bebek after the first commercial break. Ivan will talk about RN Resources, which is a company that has a couple of world-class targets, exploration properties, gold and copper properties in Peru, and also has a very major target, very large-scale target up in Nunavut in Canada. And Ivan and his team have done a remarkable job in the past of making a lot of money for their shareholders, and I think the chances are very good that he'll do it once again with RN, and that's the reason that I have him as a sponsor to the show and the reason that I own the shares and the reason that they are also recommended in my newsletter. So we'll be talking to both of those gentlemen a little bit later, but right now I'm really pleased to tell you that Michael Oliver is with us again. Thanks for joining me, Michael.
Hi, Jay. Good to be back.
It's really good to have you every other week. We can't get you every week, but at least if we get you every other week, that's half as good as what we could have. So I'm so thankful that you're with us today. And our gold is really starting to move again. I think you were telling me that we've seen it at these levels this is like the third month in a row. It comes up to these levels and then it gets taken down. Is it going to happen again? We're going to see these levels? I mean, we're at 1760 or something like that right now.
Well, no, if you look at the high price of the front month future over the last 3 months, it's the same price within $1. 1775, you round it up to a 25-point increment, but it's 1776, 1777, today 1775. It's almost ridiculous looking. I've never seen a chart behave this way. It's still very firm. And, everybody thought we're going to collapse. Every time we go down, it's going to collapse. It's all over. It's either going to correct big or it's a bear market coming. And, the litany it just goes on. And yet we keep coming back up. I think instead of watching gold, which of course you should do, but instead of just focused on gold itself, watch peripheral markets out of your side mirrors. And there's two big ones, of course. One's the stock market. And gold was viewed, and rightly so, by many analysts and investors as an alternative to the stock market. So were T-bonds. And this was, during the first quarter of the year. And yet, with the S&P turning back up with its lovely rally, gold is not caved.
Mm-hmm.
In fact, T-bonds is not caved either. And yet you would think, well, if they're alternatives, they should cave, right? No, well, they didn't. It's as if they're saying, hey, this isn't over. Okay? Now, they've not been violent. Gold's not been violent. And in fact, even if you stand back and look at its sell-offs that everybody is so scared of over the last few months, stand back and look at a monthly chart going back, 10 years or so, and you'll see that actually we've been in a fairly sedate, narrow range. It's not been that wild. Anyway, we're back at the top end of that range, and now I would suggest looking at the dollar index, which continues to weaken toward a major breakage number that we've been touting for a while. And right now it's trading 1% above our key number. And I suspect it's going to take out that number soon. That's something to watch because most people, the foreign exchange markets have not been a major factor because they've been so sedate. And I'm talking the major currencies now, the euro, the yen, British pound, and especially the dollar index. They've been almost sleepwalking for the last year and a half, 2 years. Very narrow range. But there is a structure below the dollar index, which if we trigger, and like I said, it's 1% below us right now, I think it's going to head south in a hurry. It's going to make some noise, in other words. So that's a factor to watch. Watch the S&P, because this rally, as lovely as it is, and by the way, MSA called the upturn one day after the low. We said, if you're bearish, get out of the way, they're going to hurt you. And sure enough, they've hurt you. We're trying to time the rollover in the broad market. And we're focused primarily on the leadership stocks like Amazon, Apple, and so forth, which are the very narrow leadership stocks. But we're trying to time a rollover in the stock market, and I think it's probably soon, like in the next week or so. And I think that'll be a factor that helps gold because then again, once again, investors in the stock market will have to decide, well, do I want back into the alternatives again, gold and T-bonds? And I think the answer will be yes. So I'd be watching the stock market and the foreign exchange markets as probably the key next drivers for gold.
Well, certainly, Michael, we're seeing I track the analyst projections for producers, large, medium, and small producers, and the earnings that are being projected out through next year are just going up very dramatically, very, very significantly, especially for the smaller cap producers. And so I can't help but think that should be very bullish for the mining shares as well. And what about, with a couple of minutes left here, how is GDX or some of those indexes that you watch?
GDX is right now lagging again gold, meaning while gold's back at its high, GDX is a couple points short of its high. But GDX is like a little screaming baby, pardon me. It sometimes will squeal loudly on the upside and squeal loudly on the downside. So it's an erratic beast, but it will follow gold. I have no doubt of that. And I think it's primed to go up. Actually, our swing measurement for this major breakout that occurred a few months ago, the crossing of the trading up to 32 was a breakout on price charts, is to go into the low 50s before its next major rest stop. And I think that's probably where we're headed. And it, of course, is watching gold. And if gold makes new highs, gets up into the low 1800s, for example, I think GDX would be back to its high and screaming again on the upside. So you just have to learn the behavior of the miners. They are very emotional both ways, but I think they will outperform gold. And there's good reasons. I mean, like you said, the price of that which they mine from the earth is going up nicely, and their cost of production is going down nicely because you've got energy prices at long-term lows. Even $40 crude is low. So they've got on both sides of the equation. They've got it made.
Yeah, it's working well right now, for sure. No doubt about that. Well, also, just with a minute and a half left here, Michael, what about copper and commodities? Well, just to address copper, because our next guest is RN Resources, and they have...
firming up very nicely, and it looks like it's about to engage on the upside. Copper, unlike the commodity market as a whole, like the Bloomberg Commodity Index, did not make a new low in the recent drop. It held above its 2016 low, and since then it's gone vertical. And we're not too far away in copper, we covered in our reports, from breaking it out to the upside again in a very strong way. And I don't think this is an economic thing where, the economy of the world's getting better. I think it's a situation where low-priced commodities, which simply aren't going to go and stay at low levels forever, are being boosted by central bank monetary stimulus, and that investor preferences are shifting away from questionable developed market stocks to low-priced, low-risk commodity assets, and I think copper can be put in that category.
Yeah. Well, certainly it could be considered almost a monetary metal, gold being the top one, silver, and then I still have some pennies. I have some copper pennies laying around here, so I guess it could be judged. It could be thought of as the poorest of the poor man's gold, I suppose. But in any event, it's good to hear that from the perspective of RN Resources, because they are really looking at some very large-scale copper and gold targets in Peru. So anything else, Michael, with 30 seconds left? One final note?
Let me think. We'll watch the Bloomberg Commodity Index because copper, of course, is a factor there, and crude oil is as well. We're still looking for the commodity complex to reassert itself like it did in the late 70s, followed gold up a year and a half or two after gold already turned up. Then the commodities, which were depressed, went up during a period of global stagnation. They called it stagflation, of course, a new term, where you had monetary inflation that did not go into the stock market. It went into the commodity markets. And so I think as gold engages in this next phase of upside, you'll see the Bloomberg Commodity Index, and with components like copper and grains and so forth, engage as well. I don't think they'll outperform gold, but I think they'll be quite strong. So that's another arena to look at, is basic commodities and stocks that are directly related to those commodities.
Very good. Well, thank you very much, Michael, for being with us again. Your insights are always coveted by our listeners and by yours truly. So thanks so much for being with us.
Thank you, Jay.